The Hedgeless Horseman here, it's February the 7th, 2023. Let's look at the markets. I haven't been following anything today, really, but markets appear to be, well, the broader stock indices appear to be neutral. Dollar is down a bit. Apparently something happened here. I'm assuming that was some headline of some sort, which I have not paid attention to. Commodities, oil up, LNG up quite a bit from very low levels. Gold is, almost flat. Silver almost flat. Copper is up a bit. I think nickel is rebounding higher a bit today. There's not much to say. And of course, it's I keep harping on it. I mean, if there was no news out today, nothing changed for any of the companies out there. But still, share prices will swing. Some are up 10%, some are down 10%, some are down 5%, some are up 5%, etc. And that's the kind of stuff you really want to see. The more volatile a sector is, the better. If you can handle volatility and actually, what it's there to do. I mean, it's there to serve us. GDXJ, what was that? Okay, up a bit, and I see a bunch of people drawing charts. Is this a reverse head and shoulders patterns? I absolutely have no idea. I don't care. Again, I only have one reason to buy something, and that is if it's undervalued, and I have only one reason to sell something. If I think it's not undervalued, or I find something that is more undervalued. And again, why I, since I got into this sector, I think it was August or September or something, 2015, it's I'm fully invested at all times. And I go with the flow. And like I said before, I mean, in this chart here, for example, I mean, it's one big rip here, one big rip here. That's it. I mean, it's in this whole period here, there's two absolutely awesome periods. The rest is typically choppy, typically downtrend. So it's 80% is choppy downward action. And then you have the occasional rocket. The thing is, you never know when the rocket is gonna go. I see it as, again, let's say fair value is actually closer to something like this. You don't know when it's gonna revalue the fair value. It just happens. And then it crashes far away. And then it just revalues. And then there's momentum that takes it over. And then we go down again, etc., etc. Totally chaotic. Most of the time this market has no idea what it's doing. And I'm not gonna try to guess what an emotional Mr. Market is gonna do. I just buy something where if you buy it cheap, it will eventually reach fair value and even cross it to the upside. If you overpay, it can become more and more overvalued, but sooner or later it's gonna retrace to the point of gravity, which is fair value, and typically cross even below it, etc., etc. So here's dirt cheap, dirt cheap, dirt cheap, dirt cheap, expensive, expensive, etc. And that's all you need to, in my opinion, focus on. Buy something cheap because the risks are automatically to the upside, and it's a matter of when, not if, you're gonna make money. And that's the best position to be. Because if it's a matter of time before you make money, you can't really beat a strategy like that. I mean, by definition, you're gonna make money just as long as you actually hold out until your hard work pays off. Because you don't know when the market is actually gonna start revaluing something. Anyway, let's look at, for a commodity bull, copper, 30-day LME copper warehouse stock levels, 30-day low. This is the 6 month chart, new low. This is the 1 year. It's almost at 70,000 tons level. which if it goes below that, I guess it's at least the lowest inventory levels in 5 years. So again, you see, I'll come back to that later. You see lithium very hot right now, but it's like, personally, I think the risk reward is a lot better in some other commodities. Not saying that lithium is going to crash or going to go down or anything like that. It just, I don't think there are too many. If I had to guess, I would say there aren't too many lithium stocks that are like absolutely no-brainer cheap. Whereas I think there's quite a few, let's say, gold copper juniors, which are probably at least 200% away from fair value, if not more. And I don't think you can say that about lithium companies. And again, I don't want to pay up for the expectations of a higher metals price, because then you're paying a speculative premium. It's like back here when First Majestic, etc., was trading like silver was at $35-40 or something, while silver was actually at, I don't actually remember, but I think it was around $28, if even that. So basically the only way you couldn't be overpaying is if you knew 100% certainty that silver would go a bit higher even and soon, and it didn't. And then First Majestic crashed, I think 70% after that, which made sense. I mean, it was very overvalued. Anyway, another topic, I think Gold Discovery has run by Luke Tenhave, which is a smart guy. He has a very interesting set of slides. This is the Serious Resources Noah Bollinger discovery. And there's a lot to learn from just looking at past examples of how the market has behaved in let's say a big success story. This one is kind of interesting. Here you obviously see that the revaluation happened very quickly, and then it kind of traded sideways. Even though it's like things happen, etc. But still, it's like, if on the point of, you never know when the market is going to price in what is there, let's say, or start to care. First here, during the discovery, I mean, understandable, was a hot new thing, discovery, that typically creates a lot more excitement than something that is known already. So typically you can see somebody make let's say a discovery, and it after a few holes perhaps trades higher than an advanced asset that holds the same metals. But as long as the blue sky dream is alive, typically they can trade very high. It's not until they mature that it kind of tapers off, if you know what I mean. But still, you can see it's like, okay, here we have 2 holes hit more than 60 meters true width of 3.4% nickel and 1.3% copper. Absolutely bananas, of course. Okay. Reacted higher. Not long after that, was actually trading lower on no news so far. But I guess, kind of front ran the placement perhaps, which is kind of typical. And then best hit yet, yada yada. And then and a new nickel discovery. And then it exploded again. And then it retraced the whole way after it had put out a resource and, wide hits, another hit. Okay, wait, this Noah. Oh, okay, Noah Bollinger. Okay, apparently there was like 2 discoveries, I guess. So it's like, here it's at the same price as it was back here. But obviously a lot of stuff had happened. I mean, they had more money, they had 2 resources out, etc. Had even more hits. So I kind of look at, this somewhat resembles, in my opinion, think like Elora Resources. which made the high, you know, shortly after the discovery, and then it just consolidated basically. And obviously, I mean, this is a lot of de-risking, feasibility study, raised more money, and there was some merger and acquisition, and, you know, going towards production, etc., etc. I was like, yeah, here was when the, you know, quickest money was made. But as long as you pretty much bought every low, now and then it would reprice higher. And I guess the point is that I would say it would be a lot less risky here than here. So you could buy a lot of success without paying any price for it, let's say, which I find very interesting. And it's like, okay, from my perspective, since I own, I mean, up here it had a market cap of 1.12 billion. And if I'm not mistaken, they only owned 70% of it. And obviously Blue Sky was open, etc. But it's like, okay, that hit $1.12 billion here. It tabled a resource of 10.2 million tons. And at 2.4% nickel, 1% copper, yada yada. And then made them Bollinger resource 4.4 million tons or 1.8% nickel, 0.7% copper. I mean, my take was like this just, in my opinion, enforces my opinion that Magna Mining is just ridiculously cheap. Sure, this is an even larger resource, especially today, I would say. And this was actually higher grade. Well, this is higher grade, at least than the overall Green Hill resource. But it's like, given the advanced stage of Magna and the team, etc., near-term cash flow potential, I mean, Magna is less than or around 200 million. So this was trading at 1.12 billion, with I think owning 70% of the deposit. So they didn't even own 100% of these deposits. So again, it's like with Magna, I have no idea. You don't know when the market is going to figure out how dumb it is, but I think that will come. And here's like Great Bear, which I've showed a few times, I guess. But it's like a bunch of stuff happened. I mean, here it was obviously more advanced than here, for example. But you could buy it at the same price, which was too cheap, and then swoop up again. And then they keep on drilling, and, you know, if we believe Kinross fair value was actually up here, it's like just a few months it was down here, a few months earlier. So question is then, it's like, okay, according to Kinross, the market was off by, I don't know, 100% at least. That's not a small feat, actually, to be that wrong. But takeaway is that you never know when, let's say, confirmed success is going to start being priced in again. Because let's say somebody has a big position and they need to de-risk or take money off the table, so they will sit on the share price for a while. And all of a sudden they have sold all the shares they wanted to, and the path of least resistance is up. It's like in Magna right now, where you have you know, shares free trading, which I think is still one of the reasons why Magna just continues to be cheap for the time being, because there are some people who have shares to sell because they might think that they have too much of Magna. So as long as there's not enough new buying, you know, we need to work through that volume, and then all of a sudden, poof, that selling pressure will be gone, and then I expect the revaluation train to start moving again, because it's just ridiculously cheap, Magna. But it's like highlights the point that the market does a lot of weird stuff. Simply because depending on if there's more buyers and sellers. Now we can understand why they're suddenly, let's say, materialized sellers in the case of Magna, because they couldn't be sellers before. Now they can be sellers. So even though I think they would be dumb to take profits, that doesn't mean they're not going to take profits. So they might sit on it for a while, and it might be harder to go up. But sooner or later, those people will be gone. They will have sold their shares to people who think that maybe Magna should be 200% higher, and won't sell a share until it is 200% higher. So in that case, maybe, we have that kind of, okay, all of a sudden they're out of shares and nobody's willing to sell at these levels. So that just leaves, path to the upside. Because if nobody wants to sell at a given price, there's no way for the stocks to get cheaper. So again, I think that's going to happen. Ophir Gold is kind of interesting. I joined in the private placement. I think it was around 10 cents. I haven't checked Ophir too often. Yesterday I think it was up 40%. To me, when I participated, it was just a cheap bet. I mean, they have a silver gold project in Idaho, which I think looks pretty good, and it was cheap, and they picked up some lithium ground, and their VP exploration is apparently the VP exploration of Patriot Battery Metals, which is possibly what I would say possibly the best performing stock on the TSXV or something in the last year. I think it's up like 30 bagger. So again, the risks are automatically to the upside if you buy something cheap. I had no idea lithium was going to get this hot. But this relatively small position, which I took much thanks to there being full warrants involved, all of a sudden that became kind of material, and I don't know where Ophir is going to trade tomorrow or next week or next month, and I don't know much about lithium, etc. But I just if I get full warrants, that changes the cases materially. I mean, the risk reward gets totally skewed. So I would urge people, if you can, not you should get into any private placement, but there are some good private placements out there, and do not underestimate how much the risk reward changes if you have let's say a full warrant. Completely changes the risk reward, and especially if you start off very cheap. I mean, if you get full warrant 50% higher than where Barrick is trading, I mean, it's going to take some, Barrick is not just going to pop 50% out of the blue typically. I mean, then we need a really big bull market. But if you take that in, kind of asymmetrical bets, like sub 1% positions in a high risk reward, high risk high reward story, you get full warrants. And again, not a big position, but it's like if just one of those works out and you have a full warrant, I mean, you could easily have a 10 bagger, and you would only need 1 in 10 to work out that way for you to be even, and that if the other 9 goes to 0. So another 2 points, I guess. Again, private placements. If you can, I think you should really look at joining private placements, especially if you get full warrants. Even, I mean, some stories that I think are really good, and you only get a half warrant, I think those are worth it. I'm, for example, currently participating in Headwater Gold's private placement. I want to participate in Alpha Exploration's private placement, which they announced, I think, yesterday or 2 days ago. I want to participate in, well, I have participated or I'm going to participate in Sanyu Gold's private placement. It's an African explorer. I participated in District Metals private placement, etc., etc. So it's like, yeah, you get half warrants or full warrants, etc. So if they have like a 2-year period, if something good happens to the upside within 2 years, it might be sector driven, sentiment driven, like in the case of lithium, for example, or they make a discovery, or they have a discovery and just prove something up, or de-risk it further. The returns can get pretty wild, but at the same time, you don't need that. My concentrated portfolio and the HODL portfolios, they have no warrants. They don't use leverage, and still they have shown very good returns. So you don't need it. It's just if you have it in your tool belt, meaning you qualify to get into private placements. And I'm not sure, but I think actually Canada changed something which allows you don't even need $1 million anymore to participate. I'm not sure, you would have to look that up, but if that's the case, it's like, don't be sleeping on private placements with warrants if one or more sectors are trading at ridiculously low levels where the risks are to the upside. And if you get 2 years of risk-free upside, that's just incredible, absolutely incredible. Yeah, okay, I think we looked at it. Oh, yes, and one other thing. It's like last week at least, I've been very busy just looking at companies, and I'm writing up 2 new articles right now. And I've basically been super busy just, again, thinking about investing. What are the best cases? Hopefully, you'll find a new case that is very cheap and, pretty unknown, etc. That's really what you should be. You should be so busy. I don't know if I think I checked the gold price once today. Before this video. So I think, that is actual work. You should put all the effort into investing, not just ticker watch. That is not work. You should be so busy just thinking about companies, reading up on companies, reading up on investing, reading up on, educating yourself about mining and geology, etc. That you shouldn't really have too much time to waste looking at tickers or the price of paper, gold or paper, silver. That is not how you get better rewards. The one who watches the volatility the closest. Now, if you just find one company now and then that's like, hot damn, this is super cheap. Like, last example, for me is obviously Magna Mining. And just, theory craft and think about it, and it's like, okay, what is this worth? And then just fully appreciating an opportunity. That is how you actually make a lot of money over the long term. It's like outworking people, and I don't mean looking at daily volatility or ticker swings. Because in my opinion, there are companies out there, you might have a bunch of cheap companies, juniors. But some juniors might be 200% cheaper than other juniors that are also cheap. If that's the case, that means the one cheap stock is still a 200% better buy than another stock that you could consider to be cheap. So at surface or face value, you might think, hey, okay, I'll buy these 5 companies because they're cheap. But if you did even more due diligence and you thought about it, theory crafted, it's like, okay, what are the actual risks and what are the risks to the upside and downside? And it's like, the more you think about it, maybe you thought about the 5 cases for a week, obsessed a bit about it, and you realize that 2 of those companies, of those 5 companies, are, again, 200% better than the other 3. So you take larger position, or maybe you sell what you had in the 3 others that were cheap, but it was not as cheap as the 2 that appear to be, provide 200% better risk reward. That is, if you've done that, and it's like, regardless of what the actual results are, because there are no guarantees. The other 3 might actually outperform your to more concentrated bets. Because what actually happens doesn't necessarily say much about what the actual opportunity was. But on a long enough timeline, it will shine through if you have done that kind of work and can typically identify, see below the surface and identify, yes, to everyone else these 5 juniors are equally cheap, but it's like you did more work than anyone else, and you really appreciated how cheap the 2 of the 5 were. So you take larger positions when those kind of cases show up. Then you'll probably have very good long-term results because you did the work. And if you're right on that, that means that Mr. Market was mispricing 2 of those 5 by 200% relative to the other opportunities in the sector, let's say. That's a huge gift from Mr. Market. That Mr. Market was making grave mistakes. Not only that all 5 were cheap, but maybe 2 of them were like just absurdly cheap. Too much risk-adjusted free money on the table. And you could identify that and buy that. It's like, in my opinion, like Magna, for example, such a great risk-reward play. If I took a 1% position in Magna Mining, that would be a total waste of an opportunity. If it's one of the best opportunities, if not the best opportunity you've seen in 7 years, let's say, why on earth would you put as much money in that as you would that you're in your 10th favorite stock? Just for diversification purposes, I would say that's a waste of an opportunity. In that case, I mean, it should reflect, we should obviously have higher concentration in the better place, especially if there's a margin of safety involved, because you can't compound a loss. But if they're all based on what they already have, if it's already cheap based on that, that means there's margin of safety, and if it can grow on top of that, that's great. Anyway, another one I got asked about this or about Eskay Mining today. And first I thought I'll probably just gonna wait for the last results to be in. But still, it's like I think this is a good example. I talked about Brunswick Exploration last video. They are an area play, if you could call it that. They have basically hoarded a bunch of ground in, I think it's in Quebec, which has lithium potential, and it's not far away from Patriot Battery Metals. And apparently somebody commented on YouTube that there's some historic holes or something with pegmatites or whatever it's called. So there's there's some proof that there is lithium bearing rock there, and that's fine. But still, it's like I would still consider it kind of to be a mostly an area play, because I don't think they have personally done a single drill hole yet, which got me thinking. And I talked about Brixton last video, and I mean, when you think about it, like take Eskay for example. Eskay is pretty much in a similar position, because they control about 85% of the Eskay Creek district, which is a VMS district, and VMS deposits tend to show up in clusters, which they've shown because they already hit VMS at we know there's VMS at Siblulu, TV, Jeff, Scarlet Ridge, latest one, and there's probably more stuff that we haven't found yet. In the case of Brunswick, for example, that I think somebody said there's like a 2% chance that pegmatites would be lithium bearing or something like that. So you need to have a lot of targets like that in order to find one that is actually hosts lithium. I mean, when it comes to Eskay Mining, I mean, these are bleg samples. They directly show that there's gold and silver shedding. It would be like there's actual leakage of lithium, so you would know that they at least are, hosting or bearing the metals you're after. So it's just kind of interesting. Eskay has 145 million market cap. I think Brunswick is around that market cap as well. But Eskay has Discovery TV, Discovery Jeff. They hit what one could consider, discovery over at Scarlet Valley, Scarlet Ridge. And the interesting thing is, like, yes, we talk a lot about, lithium is high price right now, and there are some deposits out there, could be or are worth billions of dollars. But when you think about it, Eskay Creek alone, the original Eskay Creek, would probably be worth $4 billion today, which is currently more than twice the market cap twice the value of Patriot Battery Metals. And Skeena Resources right now has a project that on paper is worth, I think, well over 1 billion right now, and they're finding more, and that's from the remnants of the Eskay Creek. So from that perspective, this Eskay Creek deposit here, if you count what was mined and what is still there to be mined, one could say that would be worth $5 billion. So imagine if, I guess my point is that, yes, everybody's totally hyped up on lithium right now, and not hyped up on gold, copper, silver, etc. But this is a pretty good case. Like, here we have direct evidence of a deposit being formed here that would be worth some 5 billion today. And they control 85 of that district. That's like, more than, let's say, twice the current market cap of Patriot Battery Metals, just in this deposit. And VMS tends to show up in clusters. And they have, a whole district which is suggested to be hosting a lot of VMS deposits, because the Bleg samples tell us that there's gold being shed. So there's something outcropping over large areas here. There's a lot of smoke. So imagine if this was Patriot Battery Metals Corvette deposit here, and this was all lithium smoke over tens of kilometers, and they actually have hit. They actually know that. They hit gold and silver here. We have hit gold and silver TV Jeff. We know there's gold and silver at Siblula, so it's not a question of 2% chance that a pegmatite body will be lithium bearing or whatever. There's direct evidence of 1, 2, 3, 4 at least, discovery areas for VMS deposit. But it's not easy to find. But I think it's interesting when you think about that. It's like when the hype dies down, it's like everybody forgets about. Well, typically when sentiment goes into the toilet, narrative follows price, kinda. But it's like this is also kind of again area play, but with discoveries. Like 1, 2, 3, 4 discoveries already. And on that note, it's like it's not super easy, compared to, I guess it's much easier to, first of all find lithium and also drill it up. A good gold and silver mine is probably a lot rarer than lithium deposit that could be made into a profitable mine at today's prices, at least. But Skeena put out a very interesting video. They did it with K Report. Video update 2022 exploration review. Just think about this, and I highlighted this before, that Skeena has obviously found a lot more close to the original Eskay Creek deposit, which the previous operators didn't even know existed. Mineralization. So they've shown that's 10, 20, 30 meters from historic drill holes, there was new mineralization, etc. And that's how they today have a project with a net present value over $1 billion just from the remnants and stuff that was previously unrecognized, which just shows how a bit tricky it is with VMS deposit, but also the prospectivity of this, Eskay Creek district. That there's multiple layers. I mean, you have the lower mudstone here. I think this is even lower mudstone, and this is the contact mudstone. So you have 3 horizons with mineralization basically at Eskay Creek, the Eskay Creek deposit, and obviously John De Decker and the team has shown that around TV and Jeff that there's like they find multiple feeders, let's say, and every feeder leads up to something because it reaches it's feeding something, which is the surface of the the paleo surface back then, the paleo ocean. So if you have a feeder, you know that that feeder is going to end up somewhere, and it's just listen to this interesting thing when they talk about they believe there's potential for let's say another half or the extension of the Eskay Creek deposit to the north, and there's actually been a lot drilling there, but they simply think that yes, even with that amount of drilling, they didn't drill deep enough or they misinterpreted something and yada yada. Let's listen.
First drill hole. So we'll talk about the Eskay Deeps discovery. We'll get straight to it. This was hole 1081. Basically 4 grams a ton gold, over 32 meters at a depth of 850 meters vertical depth. And this is footwall hosted mineralization. So remember how we were just talking about the grade? I said the rhyolites, typically about 2 grams per ton. Here we're actually getting slightly better grade, hosted right underneath the contact mudstone in an area that had been previously drilled. But we'll get into that in a sec. So here we are in cross section. This is the section line here over on the map to the left-hand side. Surface up at the top. Our stratigraphy of rock types. Here's our next zone, which is the northern extension zone, which was historically mined by Barrick. And then you can see all the historical drill holes that were put down in this area. They were looking for the depth extensions of Eskay Creek. Makes sense. Let's do some linear geology. If my deposit is here, I should probably be going out in the same direction. What you're not seeing on this section is me annotating a bunch of gold and silver hits, because they didn't have any. So when they sampled the contact mudstone, for the most part, they didn't get anything. Then what they did is they would either just stop the hole, or they'd go a little bit further into the rhyolites and the dacites, but they'd be selective sampling again. Unfortunately, we can't go back to the core because it's all destroyed. Now, anybody in their right mind would say, well, what the hell's the point of going in there? It's been sanitized. Why are you drilling that again? However, because of the selective sampling, we can't assume that they were actually targeting that mineralization and that there's nothing there and it's been written off. And there's the proof in the pudding. Again, the 4 grams per ton over 32 meters sitting in the rhyolite. If we look at a cross section through that same drill hole, again over here on the map, you can see just how sparsely drilled it is. Some drill holes just didn't make it down far enough. Again, a lot of them just weren't even sampled. Now keep in mind, our contact mudstone, when we did hit it, was only 1 meter thick, and it had nothing in it, which is consistent with what everybody else had drilled historically. But again, here's the proof in the pudding, the 4 grams a ton over 32. But if we come back to our original geological model, remember when I was saying, there's a plumbing system. There's the plumbing system. So that mineralization had to come out onto the contact mudstone somewhere. And based on what we've learned so far, that should be within about 150 meters.
So, I mean, just to stop there, it's like, consider what he's saying here. I mean, obviously, you can see how many holes were drilled here. I mean, that's a bunch of holes. I mean, that's much more holes than Eskay drilled at, the Scarlet Valley area, for example. I mean, I think I don't remember how many Well, first of all, what they're drilling is, I think it's at least a couple kilometers long. And this is many more holes over a smaller area. And they hit, it appears, well, this is Skina that is drilled, but previous operators drilled this many holes. And they'll go into it soon about what this could potentially mean. But point being is like, when you saw... I don't think people fully appreciate how exploration works, especially, let's say, with VMS deposits. I mean, you really only need one hit that shows, hey, there's a mineralized system here, and that tells you everything. Yes, this, there's VMS here that's spewed out gold and silver bearing fluids. But it's like, what always tends to happen, or what did happen, is like, yeah, okay, didn't hit an absolute bullseye in the first, few holes, and the sky was falling. I mean, Skina is a very relevant real-time example of how much can be left, let's say, nearby from where you already drilled. I mean, again, just the stuff they're finding now is worth over $1 billion, and that's a lot of it is from what the previous operators didn't even realize was right next door. And this obviously trends down towards Siblulu is coming up on strike here, directly on strike from the Eskay Creek deposit. And it's like here, okay, you saw a bunch of a bunch of drill holes, and there's like one material intercept here, and that's enough for them to hey, okay, there's obviously something here. But it's like, yeah, previous operators drilled, didn't see anything visually exciting, etc., didn't just partially sampled, yada yada yada. Sometimes they might not have known it at the time, but it's like maybe they drilled too shallow or whatever. Well, it's like, that's how it works. It's a process. Just to hit something is significant, especially if it's I mean, I don't, off the top of my head, I don't remember what the best assay was from Scarlet Valley or whatever, but it showed significant mineralization. It doesn't mean that it was an absolute Eskay Creek barn burner hole, but you can see here, it's like this is how many holes that has been drilled here. They hit one, and one of the holes had just, again, they hit the contact mudstone, which we are hitting over at Scarlet Valley, and the same age as this Eskay Creek deposit, which which is hosted in the contact mudstone. So it's like, back in the days, I don't know, 300 million years ago or whenever this was a lake, I assume, here, and here over at Scarlet Valley, I mean, that's what, 7 kilometers away, and probably in the same lake. So if there's mudstone here, which is produced bottom sediments of a lake, same age had sediments over here. And obviously they've hit mineralization. So whatever was spewing up fluids from deeper in the earth onto this lake or sea floor here, at the same time was spewing up fluids here, 7 kilometers away. Well, 7 kilometers away today at least. So imagine if we could rewind the tape, hundreds of millions of years. This was all the bottom of a lake, or bottom of an ocean, or what have you, and there was vents spewing up metals. But this is the one that has been confirmed. I mean, so far the only significant discovery here, but it is more than obvious that, well, we have already confirmed it, that there were more vents in this district that spewed up metals. Anyway, let's continue.
Per ton, over 32 meters sitting in the rhyolite. If we look at a cross section, through that same drill hole. Again, over here on the map, you can see just how sparsely drilled it is. Some drill holes just didn't make it down far enough. Again, a lot of them just weren't even sampled. Now, keep in mind, our contact mudstone, when we did hit it, was only a meter thick, and it had nothing in it, which is, consistent with...
Just listen to that. It's like they hit the actual contact mudstone, which shows the Eskay Creek mineralization here. They hit it. It was only 1 meter thick and had no mineralization. And yeah, just keep that in mind.
With what everybody else had drilled historically. But again, here's the proof in the pudding. The 4 grams a ton over 32. But if we come back to our original geological model, remember when I was saying, there's a plumbing system. There's the plumbing system. So that mineralization had to come out onto the contact mudstone somewhere. And based on what we've learned so far, that should be within about 150 meters of this drill hole.
Right, so they actually hit a feeder structure, and that is... Eskay Mining has hit a bunch of feeder structures over at TV and Jeff. Stockwork zones, and already has 2 massive sulfide horizons, TV Jeff, 4 kilometer trend, etc. The tricky part is, of course, like he's suggesting here, all these holes, one hit here, and that just, okay, obviously there's something here, because we're hitting this in a feeder. So somewhere back in the day, this feeder took up mineralization, and that mineralization got spewed out on the seafloor, forming the actual, let's say, massive sulfide mounds, like a feeder zone mushroom, like a mushroom cloud, and then it spews out on the actual seafloor. So it's like all the way here you have along basalt. I think this is mostly feeder stuff as well. Stockwork mineralization, right, focus near basalt and andesite dikes. So it's like this is the Scarlet Valley area. So that's what they're talking about. It's like this is areas in the ground way back when, where the mineralization flowed through on the way to the seafloor back in the days. And the contact mudstone, for example, that was, let's say, sediment-hosted deposit. It was not the, by definition, the feeder zone, but actually what was left after the vents had spewed enough on the actual seafloor. I think it would this, for example. A seafloor accumulation, and then we, let's say, have a stockwork zone or feeder zone, and this is the type where you have the Eskay Creek contact mudstone, which was the seafloor back then. So this is just the pathway, and here is where it's actually mostly accumulated. Even though it's like over a TV, we've drilled the actual stockwork zone, and that's where we've had very, very good. I don't know if the assays are actually in here. Maybe not. Nope. Anyway, we know that we've hit like 90 meters of over 2 grams per ton AU equivalent, and again, that is in the actual feeder zone. That is not in the actual massive sulfide mound. And let's get back to this.
So, wow. What a way to open up a can of worms. First drill hole, it's only 2 inches wide, got it down, and managed to hit mineralization. Really happy with that. So, where am I going with all of this? Okay. What kind of irritated me, and Adrian and some of my geologists as well, is if you've got a world-class deposit, why does it suddenly just truncate? Okay, it just stops in the middle of nowhere. Now, granted, because we have a really good understanding of our Eskay rift model, you could argue, okay, well, Paul, there you are at the end of your rift, at that sort of termination where everything sort of culminates, and then it's game over. However, if that was the case, and that was the end of Eskay Creek, there is no way on God's green earth that hole 1081 should have hit anything at all, but yet it did. So what does that mean? Well, we're thinking, and again, this is very conceptual, is that the entire Eskay rift has been moved. So if we imagine, perhaps, let's just postulate a fault that comes running through here that truncates the deposit. And then if we just take, the footprint of Eskay Creek, move it over, again, this is a very conceptual idea. It would serve to explain a lot, including, say, and as an example, those two historical drill holes. One of them never made it down deep far enough, and the other one could have potentially just hit sort of a paleo high where they didn't get any contact mudstone. However, look at that. There's 1081.
So, I mean, this kind of sums it up. I mean, well, first of all, stuff happens over hundreds of millions of years. So it's like, okay, their theory now is that, hey, maybe part of this ore body got faulted off and, got relocated to the north. And like the show here, it's like, even despite all these holes here, they still think there's potential that there might be considerably more. And that's just based off of one drill hole, one hit. Because that tells them, obviously there's something here. Even though every other hole here pretty much missed. They hit one hole, and anybody else who would see this would like, yeah, obviously there's nothing there. But either, again, if this was displaced, yeah, it could make sense why, all of these actually missed the target, especially if it has kind of a same, orientation, size, etc. And like he also talks about, it's like, okay, this hole actually, they don't think it went deep enough. Okay, so even if it's there, you didn't drill deep enough. Okay, that's an automatic fail, obviously. And maybe some other hole here simply missed the mineralization, because so you can see there's quite, a few gaps here. So not only, I mean, think about it, not only if something is even there, and that goes for, the whole, well, same goes for Eskay Mining's targets. Even if there is, who knows, maybe a world-class VMS or 2 or 3 or whatever in all these areas, it's not the simplest thing to hit them. First of all, again, like here, there might be a big prize hiding here. And all of these simply missed it. And this was too shallowly drilled, so it was there but deeper, and this might have just hit a gap, let's say. So it just took one hit by Skina to, to quote Paul or whoever it is talking. One hit opens up a can of worms. One hit. But when it comes to Eskay Mining, for example, which is has drilled much less holes than this, totally blind. I mean, don't really have an orientation to just, okay, if we knew there was a deposit here, one of the absolutely best deposits in the world. Obviously, it doesn't take a rocket scientist to figure, hey, maybe I should drill a long strike. Eskay Mining does not have that luxury. Well, I guess except for kind of TV Jeff, etc. But TV looks to be growing, and I expect Jeff to be growing. But consider also, I mean, the way they drilled here. It's like they carpet bombed all the way between TV and Jeff. And that even, well, actually, let's look at that. I think it's this one. Okay, yeah, here. So they carpet bombed this area, and it's like, consider what he's said in this one. I mean, this is, you already know it's on strike, and these are not, multiple 100-meter step outs, really. And it's like, yeah, directly on strike. Well, some are actually, I mean, in total, I guess it comes up to, I guess, 800 meters. But this is 500 meters right here. And it's like, Skina believes that, I mean, even though there might be an extension, that something faulted this off and just shifted the mineralization a bit. So take that into concept, like here, 1.09 grams per ton AEQ over 44 meters. There's obviously something here. That doesn't just fall out of the sky. And that's what, I don't know, 5, 6, maybe, well, closer I think to 800 meters away from upper and lower, the upper and lower Jeff deposits. So there's obviously something here. This is a mineralized VMS hit, like 800 meters away. And here's some stuff also shows up. It's like, yeah, 8.65 gram per ton AU equivalent. That doesn't either fall out of the sky. That's just not anomalous gold or silver. That's high grade. And this is a bit lower. But it's like, okay, they're close to. Maybe it goes this way. Maybe there's a bunch of stuff to find here. Maybe this is a feeder, and up here you have a massive sulfide. And here's obviously something. Is this some kind of feeder? I mean, is the price somewhere around here? My point is that to most people this looks incredibly unexciting, and people actually think, oh, story's over. It's like when you actually realize how tricky it is to find these, and that just one hole, quote, opens up a can of worms, you would start to appreciate the potential that is in the Eskay Mining land package. And just one hit, let's look, what was that actual hit? And we're expecting assays from TV as well. This was the latest one. Yeah, obviously high grade ship samples, etc. So we know there's, again, it's like these grades doesn't just fall from the sky. There's obviously there's a precious metal bearing VMS system here, where the actual massive sulfide horizon is. We don't know yet. Here is one hole. Here is one hole. I think that's pretty much it so far. It's like 2 holes. Like, look at this. Look at this many holes, and they hit one hole, and they're all excited. Obviously, I mean, it's on strike, but this is the same age as Eskay Creek. And what was the actual? The hits. Okay, select spot, ship samples. Okay. 11 meters of 3.42. 11 meters, 3.42. What did I hit here? 32 meters of.
Here's the proof in the pudding. The 4 grams a ton over 32.
Okay, 4 grams over 32, and that's the proof in the pudding, which opens up a can of worms. Here you have 11 meters of 3.4. Sure, it's not as good, but it's like this is still over almost a 40 gram meter intercept. And here you have 5 meters of, well, that's including actually. So it's like, yeah, one hole. And this is not a lot of holes. This is not a lot of holes. And it's like 2 holes there. Here you have, ship samples, etc. I mean, again, it's like, if they had a hard time, if there's an extension of the Eskay Creek mine, just, a few hundreds meters, that has not even been discovered yet. I mean, can you imagine, how ridiculous it would say? It's like, yeah, the potential is gone because they didn't hit the Eskay Creek mineralization at the first try. When you have, again, I'm repeating this, but it's like, actually it's a good reminder to myself. One hole out of all these holes here, and all of a sudden they're like, very excited.
There's 1081. Our belief is that we just intersected the fringe of something larger.
Right, fringe of something larger. Fringe of something larger. Okay, this might be a fringe of something larger. Where is the other one? Got them Google Chrome. just as much as this hit here, 800 meters from where they have confirmed VMS mineralization, might be fringe of something larger. 44 meters, 1.09. There's a hell of a lot of strike potential between here and here. Where Eastern? I thought it was an. Where's the overview? Whatever. And like here, okay, here you have a nice hit. What, I don't even remember what that was. 97. 30 meters, 1.53. Okay, it's not bonanza, obviously. Including 2 meters, 4.76. But it's like, yeah, okay, nothing here. All of a sudden, appreciable gold here and appreciable gold here. It's like, we have no idea. It's like this video just highlights how tricky it is. Maybe again you hit some, you hit some gap zones, or maybe this hit was, this kind of hit, on the fringe of something. And I showed the other, Scarlet Valley, etc. Just to hit anything is significant. That is the point.
Now, what does that mean? We're going back this year. We're probably going to plug maybe 5 or 6 drill holes in that deeper portion of the deposit. If we hit something, we'll know it visually right off the bat. And then what we'll also do is accordingly, we'll just plunk wedges all around. So we'll be able to test some short range variability and basically, well, prove up and see if there is actually something down there.
Yeah, who knows, right, Paul? But
so, moral of the story is, if you hit anything of significance early on, that is significant in itself. And Skeena just, this video kind of highlights that, and it's very relevant because obviously this is exactly what Eskay Mining is after. And this is literally in the backyard of a known deposit. And all it took was one hole amidst a bunch of historic holes. And all of a sudden, it's not like, one off. No, all of a sudden, okay, we hit something. We hit something. So all of a sudden, it's like, a new discovery is back on the table. Even though every other hole here missed. One hit says that there's something here, obviously, and we just hit it. So keep that in mind. It's like this is obviously, they have so many targets, it's ridiculous. They have there's so much strike to test, so even though I understand it's not sexy at face value, but this was a swing for the fence type situation. And we don't know if there's been faulting. They couldn't know for sure, obviously. If you just step out, like Skeena is talking about, wedge it out, like, let's say, grow from a, step by step. Eskay Mining did a very bold thing, which is basically large step outs and try to, immediately, let's say, connect TV and Jeff. And that is not easy to do, to hit bullseye in a VMS deposit, even if you know there's one right here. Again, if they are correct, it means that, hey, it's not even on strike, it's displaced by, I don't know how much, it's like 600 meters away of nothing, and all of a sudden it pops up again, but it's a bit shifted. And there's obviously going to be gaps as well. So it's like, I think you hopefully get the point that if you just hit something with, huge long step outs, that's material in itself. And just to hit something is material. Especially in this district, and we know how valuable Eskay Creek deposit was. Anyway, that was a long rant, but and that's obviously why I'm last time we dropped to 70 cents, I picked up shares, and yeah, if this goes any lower for here, I think I'm gonna add again, because in my opinion this story is far from over, and they just basically confirmed that there's something. Well, there is obviously something at this Scarlet Torn VMS trend as well, and they hit it in one of the first few holes. Even and again, it's like might be here, it might be here, it might be whatever. One drill hole, one hit already says there's something here, and they're finding high grade gold and silver. I mean, this is what, 500 meters, potential for high grade gold to extend below Bruce Glacier. It's like 12 grams per ton, 20 grams per ton, 56 grams per ton, 2.7, 1.1, 7.8, 9.2, 3, 1.6. And this is the what is this? This is the Torn Lake Scarlet Knob trend. Well, there's so many targets, it's hard actually to orientate yourself. But it's like, yeah, okay. Here they have mineralization, here they have mineralization, here they have mineralization. And here's the Scarlet Valley area. Okay, not high grades, but it's like, yeah, well, 900 grams per ton silver. One hole there, I mean, again, if you appreciate how hard it is to hit VMS, even if you're on strike from a known deposit, and you still had all these misses, and it just took one hit and among a bunch of misses, and all of a sudden they're like, yeah, okay, maybe we actually have another half of the Eskay Creek mine. So again, it's like just to confirm that there's a precious metal bearing VMS system, that is very significant. And to have a hit between Jeff North of 800 meters away, and you hit around 40 gram meters, that is significant. Yeah, anyway, we know how the sector is right now. Obviously nobody I mean, in the lithium space everybody cares about potential. If you almost only have potential, you can get 100+ market cap, million market cap. If you have similar or more potential with some confirmed let's say kind of discovery holes, you don't get much love right now. Even though, yes, okay, I wouldn't say that Eskay Mining is like ridiculously cheap, but it's like, yeah, if this Eskay Creek mine here is worth 5 billion and they have this many targets, yeah, I don't think it's expensive really, given the absolute, I mean, the blue sky potential is, in my opinion, enormous for Eskay Mining, because they own 85% of the district, and they have same age rocks as the world-class Eskay Creek mine, just 7 kilometers away, and they have it's proven that it's has gold and silver, high grade stuff, and it's wide open, but we don't know where the sweet spot is. So it's a process. But just one hit tells them, okay, there's something in the neighborhood, as it suggests for Skinner Resources that there's something in this neighborhood. Long rant. Thanks for listening. Consider me biased. I own shares of all companies I mentioned. Some are banner sponsors as well. I don't share your profits or your losses. Don't invest money you cannot afford to lose. And again, it's like, especially in Eskay Mining's case, this is still a high risk, high reward story. I mean, yes, they have TV and Jeff, and I think that's going to grow. It's just a matter of time. But they need to do drilling, of course. They don't have a resource yet, so there's no let's say, tangible margin of safety, even though the potential is huge. But that's why it's let's say a high risk, high reward play. If they find an Eskay Creek, or if they find another Eskay Creek, I mean, that would obviously could be worth billions of dollars. But we don't know that for sure they're gonna find that. It's just that, hey, they have gold and silver bearing VMS in multiple areas right now. Question is, how big is it, or how big are the deposits? Where are the best parts of the deposits? They haven't even located all the parts. I mean, they've hit feeder zones, etc. They haven't even located, and that's what they talked about in this video. It's like when they hit something which was in a feeder zone, and they know, okay, now we expect the actual massive sulfide horizon to be within 150 meters, something like that. But it's a process for sure. Thanks for listening. Bye.